Hello everyone, welcome to this channel. Today we are going to discuss about Pavilion REIT. Going out for year-end peak season, let us discuss this Malaysian REIT stock. On 29 October 2021, an Invest Research maintained a buy recommendation for Pavilion Real Estate Investment Trust and with a target price of RM 1.50 per share. Based on their financial year 2023 forecast for the target distribution yield of 5%. They also make a non-ESG related adjustment to their fair value based on their 3-star rating. Pavilion REIT for the first 9 months for the financial 2021 distributable income of RM 78 million, which is decline of 6.4% on a year-on-year basis YOY, come in within their expectation and the market expectation, accounting for 62% of their financial year 2021 forecast projection and 68% of the consensus full year estimation. And Invest Research also consider the result to be in line on the expectation of a stronger Q4 2021 financial year, premised on higher revenue sharing rent supported by relaxed lockdown and cross-border restriction coupled with the year-end holiday and shopping season, which could accelerate footfall recovery and retail spending at the shopping mall. Pavilion REIT proposed a distribution income contracted by 6.6% on YOY year-on-year basis to 2.6 cents per unit for the 9-month financial year end 2021, comparing with 2.7 cents per unit in the first month of 2020. Due to the continuation of movement restriction, this is as compared to our projection of 4.1 cents for financial year 2021 forecast, followed by 5.9 cents for financial year 2022 forecast and 7.5 cents for the financial year 2023 forecast, translating into the dividend yield of 3%, 2.4% and 5.3% respectively. Pavilion REIT for the first 9 months 2020 financial year revenue is RM 364 million, is by 4% on YOY basis, mainly due to a lower occupancy rate of its shopping mall caused by the non-renewal of some expired tenancies and deferment of rental commencement amid the lockdown, as well as lower income from revenue sharing rent, marketing event and advertising. This is caused by the company for the first 9 months 2021 NPI to shrink by 6.7% on YOY basis to RM 154 million, while its distributor income declined by 6.4% to RM 78.1 million. On QOQ basis, quarter-to-quarter basis, Pavilion REIT the third quarter of financial year end 2021, gross rental revenue decreases by 9.2% to RM 130 million, mainly from the lower revenue sharing rent and income from advertisement. However, on a positive note, its NPI and distributable income were flattish at RM 48 million and RM 22 million respectively, as the lower revenue were offset by a 14.4% QOQ reduction in property operating costs stemming from decreased utility expenses and rebate given to the tenant. During this period, Pavilion REIT also incurred a capex of RM 24 million to develop a new retail space at Pavilion Mall and an upgrade of a cooling tower at the mall to improve their future earnings. While Pavilion REIT debt to asset ratio inched up slightly to 31% from 29% originally as at 30 September 2020, this remained well below the regulatory threshold of 60%, temporarily rise from 50% until 31st December 2022 by the Security Commission as a COVID relief measure. At current level, and Invest Research still believe Pavilion REIT still have an ample headroom to gear up for some new acquisition. The company guided that it doesn't rule out potential acquisition if a accretive asset emerge, which will further drive the REIT medium to long-term growth beyond the recovery from COVID-19 pandemic. In a nutshell, and Invest Research believes that Pavilion long-term outlook remains positive given the group's strategic assets which are located in the heart of financial capital in Malaysia, a competitive advantage as compared to its peers. This provides a good platform for new international brands to establish their footprint for expansion into the Malaysian market, thus supporting demand for retail space at the mall. Pavilion REIT as a post and pandemic earning recovery and distribution yield play which offer more than a 4% for financial year 2022 forecast and beyond amidst a low interest rate environment that is likely to be prolonged. So I think Pavilion REIT is a very good long-term investment for the investor who like to collect the high dividend. So if you like this channel, please subscribe up and click the button. Thank you very much. Thanks for your sharing. Thanks for your viewing. Thank you.